With a number of states gradually reopening for business, is it time to bet on stocks that thrive in a rebounding economy? I mean, that's certainly what today's action said. Dow gaining 359 points. The S&P rising 1.47%.
That was easy.
Oh, and the Nasdaq advancing 1.1%. Bye. With many of the biggest losers of the year leading the way. Hey, I say not so fast. Look, we all want to go back to normal. But even after we lift the lockdown, the new normal is going to be very different from the old normal. And I'm tired of the cliche of the normal this, the normal that. But we got to remember that things have changed. For starters, the new normal is a lot less investable. I don't think it makes sense to fall into the gap here or book a Carnival cruise or attend a Live Nation concert. Even as all these three stores, they roared, they're compressed springs, and given how far they've crashed, I think they've got more legs to them. Hey, if I were a hedge fund manager, I'd be buying these stocks for trade and do the state-by-state openings. But if I were an investor like many of you, I would let them run if I was stuck in them and then escape for the stocks we're going to be talking about later in the show. You got to understand, lifting the quarantine doesn't necessarily mean the customers will come back. Even though we're flattening the curve in some parts of the country, that doesn't do anything to solve the sudden spike in joblessness. I don't see any loan growth here. There are millions of people who can't cover their rent or their mortgage payments or pay their credit card debt. These aren't the shoppers and spenders you need to see to justify more than 4 or 5 days worth of this kind of rally, unless we get a vaccine. And as much as there are so many great minds working on that one, you'll hear one later in the show, I don't think we're going to get one in 2020. Look, I get that it finally feels like we're getting a handle on this pandemic. There's a sense that it's time to roll up our sleeves and get things done, aided by those $1,200 stimulus checks. I think it's optimistic. But let's say the optimists are right. Suppose we get a real economic rebound courtesy of pent-up demand and cabin fever. Are people buying the right stocks for the new normal? I know the best way to look at that, as always, what you want to do is you want to be empirical and you want to be based on facts. So why don't we do this? Let's go over to today's biggest gainers, because some of them did not make sense. All right, let's start with one that's a truly coil spring, and it's called Kohl's, KSS. It's up 17%. Now, I'm sure it could enjoy a short bounce as the economy opens back up. Why not? The problem, though, is that you lost the best reason to own this thing. It's one's bountiful dividend. Worse, I think people have learned to live without Kohl's during this period. Easier to get what you need from a Target or a Walmart or, yes, an Amazon. Oh, and they probably have way too much inventory. They'll have to dump that. I mean, you want to buy something off of Kohl's, you buy TJX. You buy Burlington. Not so great for Kohl's. The downfall of a department store chain is often started with the sampling of a competitor. Oh, there's been a lot of sampling in the last couple of months. Second, PVH. Well, that's up 15%. You know I'm drawn to this one because CEO Manny Chirico, who happened to be on to our TV earlier today, he's built a worldwide empire of Calvin Klein and Tommy Hilfiger. Those are great, iconic brands. But I don't know where the momentum's going to come from. PVH needs a real back-to-school season. We don't even know if we're going back to school. I also think there's too much inventory in the system, which is not good for PVH. I can't recommend it. Do think it's bottomed.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.